Good morning, everybody. Hope you had a good week. Hopefully, you're staying cool and surviving the hot temperatures. The crops are starting to get pretty dry here, but hopefully, we can get a rain within the next week or so. Markets were sharply lower on the week. December 22 corn was down 59 cents, and November 22 soybeans were down $1.11 on the week. Soybeans closed on Friday at 14.25. Strength in money flow indicators are extremely oversold in the short term, and also longer term momentum indicators have crossed negative again, and they are staying with their negative trend formed from earlier this year. Price is trading well below all major moving averages. Good support is $14. We did test that this week. I do have concern if we fail below $14, there's not really another good support level on the chart until about $13.21. Price ideally needs to recapture that $14.38 level and then also $14.63, and that would help me feel confident that a bottom has possibly been found in the short term, but we really need to get moving up higher to avoid testing 14 and potentially failing there. Managed money did exit quite a bit of contracts this week, and it wasn't fully explained in the CFTC report on Friday, but they did sell 8,000 contracts through Thursday, and according to that data, still net long 158,000 contracts. In regards to corn, we closed the week at $6.73. Strength in money flows are also very oversold on the corn contracts in the short term, and long-term momentum still remains negative and actually hasn't crossed positive since the end of April. So that's been a while since we've had some positive long-term action. Price is well below all the major moving averages, and I would really like to see $7 clear higher to hope for a bottom being in. Support levels remain 654, followed by really good support at 630. We did not test 630 this week, but that is a really good long-term support level for this contract. Managed money sold 12,000 contracts through this past Tuesday and are still net long 265,000 contracts. In regards to general updates, so early in the week on Tuesday, cooler than expected temperatures in the forecast really hit prices at the open on Monday night, which was a federal holiday. And then about middle of the week, Federal Chairman of the Federal Reserve, Jerome Powell, spooked grains as he talked about a possible recession and slowing inflation to the Senate Banking Committee. And after his comments came out, managed money hit the sell button, and also the algorithm and computers were forcing that more as well. And after the major moving averages were lost, we really saw price declines go very quickly. This was all pure macro concerns and technical trading. There was no fundamental catalyst in regards to the market to cause this, and actually the fundamentals are becoming more bullish by the day as rain is not hitting the Corn Belt. So it was purely technical trading and the computers doing this. The Biden administration asked Congress also this week to suspend the fuel tax on gasoline and diesel. It would provide some relief in the short term, but it does make the supply and demand picture even tighter, which we've had issues with. Energy markets sold off on the news, and crude oil was actually at one point down $17 per barrel from the high. It also puts negative pressure on soybean oil, and that put extra pressure on soybean prices to the downside as well. Crop ratings came out on Tuesday. Corn was down 72% to 70%, and beans were down 70% to 68% this week. So we saw a little bit of a decrease in crop ratings. Rain chances are limited in the Corn Belt, and the long-range forecasts are still very threatening, still showing hot and dry conditions. So again, the fundamental picture of this crop in the U.S. is looking more bullish as with the war in Ukraine going on, we still have a ton of pressure to produce a record crop in the U.S., and with everything being planted so late and drought conditions right now, we really need to see some rain in the next couple of weeks to hopefully get to that level. Personally, I don't think Managed Money knows how dry it is yet in these areas. Just seeing farmers comment on different parts of the Corn Belt, really how dry it is. I don't know if Managed Money knows that yet. The USDA Acreage Report is this upcoming Thursday. It's always a big report, and it always causes a lot of volatility. So expect large volatility in the markets on Thursday and through the first week of July. In regards to crop insurance, we are ready to certify your acres for your crop insurance coverage. Please have the FSA send us your 578, or we can arrange to pick it up from you or drop it off. The deadline to report acres is July 15th. We'll need to get the acreage report signed before then, and sooner the better, just in case the FSA 578 form does have any errors. Other than that, that's all we have for this week. If you have any questions or comments, please reach out to Larry, Susan, or I, and we hope you have a great weekend, and thank you for watching.